Good morning, good morning, everyone. Thank you to our audience and thank you for the panelists. We are live now. Good morning to our October edition of the Agriculture Webinar Series launched, hosted by the Delegation of German Industry and Commerce in Nigeria. It's such a pleasure to have you here. I can see that the room is filling up quickly. We've got our panelists ready to share their plethora of experiences regarding access to financing for the agriculture sector in Nigeria, West Africa. And we've got really fantastic speakers present. We've also got a really experienced moderator today with us. The session itself is organized by the Delegation of German Industry and Commerce in Nigeria, but we are hosting today's webinar together with Welcome to Africa International. The Delegation of German Industry and Commerce in Nigeria has been present in Nigeria for over 40 years. We're actually celebrating 40 years right now. We have offices in Lagos and in Abuja, and various competence centers covering different departments, from energy and environment to innovation and startups, business development and entry, and agribusiness. Agribusiness is one of our newest departments, which was launched at the beginning of the year. And my name is Olayinka Makinwa, and I head the Department of Agribusiness. So it's a pleasure to have you join today's session. We started our agriculture webinar series at the beginning of the year, looking at sustainability, but we've covered topics on a monthly basis, from water management and irrigation, sanitation, to data and digital agriculture. We've looked at innovation, we've looked at numerous aspects, and we are happy to continue the series looking at access to finance specifically for agriculture in Nigeria and West Africa. I don't want to talk too much. Like I said, it's a monthly webinar series that happens on a monthly basis. It's always on the first Wednesday of the month from 10 a.m. to 11 a.m. And we always invite a host of experienced speakers and professionals from the public, but also from the private sector, to share their knowledge. Today will not be hosted by me or moderated by me. We have Bamidele Shion-Owola, like I said, from Welcome to Africa, moderating today's session. And I'll hand over to her in a couple of seconds to introduce herself, her organization, and then to introduce the topic of access to finance. A few housekeeping rules, if I may say so. We have enabled the Q&A function for your pleasure. So please feel free to share as many questions as you have throughout the entire session. We will be picking them up at the end of the session. So we have reserved about 10 to 15 minutes to go into the questions and answer them together with our experts. You can also use the chat function to introduce yourselves. It's always very interesting for us to know who our audience is, what is their interest in joining, what are their expectations. So please do feel free to introduce yourself, who you are, who you represent, and what your expectations for today's webinar, what your expectations are. So enough about me. My name is Yinka. I head the Agribusiness Department at the German Delegation, and we look forward to a really interesting and interactive conversation. So good morning, and over to you, Bamidele. Thank you.
Thank you so much for that introduction. And thank you so much to the AHK for putting together this webinar, the webinar series for the agricultural sector. When we talk about agriculture and the development of agriculture, one of the things that is always at the top of the list when it comes to development is always finance and investments, and how can we get the needed investments to develop the sector. Agriculture in itself has opportunities across the value chain, and for each and every opportunity, there's different types of financing and services that's required. In this particular session, it's quite an interesting one because we have 4 esteemed speakers and they're all speaking from different perspectives, okay? So I'm going to quickly run through their names and their organizations, and then I would allow them to introduce themselves as well, okay? So we have Olumide Lawson, who's the director at Sahel Capital. They specialize in agri funding. We also have Emeka Njene from DLM Investment Group. They also invest, but they have special qualities when it comes to capital market. We also have Ebenezer Asumang from Huron Global, which is a development organization working with many of the large donors as well. Then we also have Opeyemi Olutayo, team lead at Access Bank, one of the leading banks in Nigeria. So like I said, I'll give each of the panelists some time, 1 minute each, to just introduce themselves. And we can start off with Mr. Olumide.
Thank you very much, Bamidele. I'm very happy to be here. My name is Olumide, as you had mentioned. I'm a partner at Sahel Capital.
Sorry, Olumide, yes? Sorry. Opeyemi, can I please ask you to mute yourself? There is a lot of noise coming from your mic. So just until you speak, please mute yourself. Thank you.
Okay. Can I go on?
Yes, please go on.
Okay, good. Yeah, so my name is Olumide Lawson. So I'm a partner at Sahel Capital. So Sahel Capital, we're fund managers. We started about 12 years ago, and since then we've been playing exclusively in the agriculture space. So when we started out, it was more of consulting. But right now, Sahel manages 2 funds. The first one is FAFIN, which is Fund for Agricultural Finance in Nigeria. FAFIN invests exclusively in Nigeria, exclusively in agriculture. And the objective of this fund is to provide funding to SMEs, one, to prove and show that indeed in agriculture, you can actually make a lot of impact. And at the same time, you can have some commercial returns. The second fund is CIFA. CIFA is an impact-first fund, so it's more or less similar to FAFIN, except that the first objective of CIFA is impact. So once you check the impact box, then we look at capital preservation. But I think essentially, just to round up, so Sahel invests exclusively in agriculture. We've been doing this for a while in SMEs. Thank you very much.
Fantastic. So if we could now move on to Mr. Emeka, you could introduce yourself and DLM Investment Group and their interest when it comes to agribusiness.
Okay, thank you, Bamidele, and good morning, everyone. My name is Emeka Ngene. I lead the investment banking team at DLM Capital Group. DLM Capital Group is a group of financial services companies with specialization in different areas of the financial services industry. DLM advises where I work. We call ourselves out as a developmental investment bank. So what that means is, whilst we're able to do a lot of the typical corporate investment banking work that the typical investment bank does, which includes advising seasoned, large and well-run corporate businesses, we've also taken our time to start driving some developmental initiatives across multiple sectors in the Nigerian economy. And for these sectors, we kind of take a sectoral approach to them. We've done a lot of work in the housing sector. We've done a lot of work in the MSME and consumer loan sub-industry. And we've not taken it further into agriculture. And as part of doing this, what we've done is we've taken our time to seek out different partners. We understand all of the risk perception involved in agriculture. And as part of our strategy to go into agri, we've gone into an MOU with NISA to start looking at ways to, again, take that sectoral approach to mobilize capital into the agri sector. And we've since then come up with our first products in the agri sector, something we call Commodities Funding SPV Limited. It sort of like works using the aggregated funding model, where we are able to mobilize commercial paper issued to pension funds to provide offtake to farmers at the point of harvest and take up their commodities from that whole fragmented informal farming space into the more structured formal storage and offtake environment. And we are now looking to do a lot more work. We're going further down the value chain. We're working on an input finance program. We're working on a mechanization funding one. We're looking at a lot of other sectoral solutions that we can deliver to the agri sector. And I'm glad to be in this call today, and I hope to pick up a lot and also share my views. Thank you.
Fantastic. Thank you so much. So let's now move on to Mr. Ebenezer. Could please introduce yourself and your organization and the work you've done in the agri space.
Yeah, thank you, Bamidele. My name is Ebenezer Suman. I work with Paron Global Development. It's a faith-based multinational consultancy firm in Germany, in Bonn. Has branches in Stuttgart, Wablingen, and then we have some satellite offices in Uppsala, Sweden, and then Douala, Cameroon. And currently, I am the country lead in Ghana, in Accra. So basically, yes, we are into project management. We do lots in communications, and then we do also lots of all kinds of consultancy. And we have done a lot with the SDG market building development with GIZ, and we've been looking at both Nigeria and Kenya. And I must say that it's been very wonderful. It's still in progress, of course, because we haven't yet gotten to the point that we are all looking at, but I must say that it's been very positive. Aside that, we have done quite a lot also with GIZ on extra pay project. Again, that looks at giving what we call a token or a bonus to farmers. So it's a project where farmers produce, take it to the market, and then when consumers go to consume, they are able to add something more to whatever purchase that they make. You know, so that's another innovative project that we have been doing with the agricultural sector so far. Yeah, so in a nutshell, that's about Paron Global Development. Thank you.
Fantastic. And lastly, but not least, Mr. Opeyemi, if you could also introduce yourself, the bank, and some of the work you've been doing in the agri space.
Right. Good morning, everyone, and thank you, Bamidele. My name is Opeyemi Olutayo. I'm sector head for agribusiness in Access Bank. Access Bank is a tier 1 bank in Nigeria, and we are actually present beyond Nigeria, in Africa, subsidiaries, and out of the continent. In narrowing down to agri, we do two things basically in agribusiness. We do our advisory service, which we give to our customer free of charge. That comes in when we see the customer, we see some gaps, either in management or we see some gaps in good agricultural practices or good agronomic practices. We offer those services for the customer free of charge. The second, and maybe very critical to the bank, is debt financing. When the customer needs funding, we provide funding. Unlike my colleagues who does the other side, we do debt. We specifically focus on debt financing for the customer, and we work along the value chain, the entire value chain. The bank does not discriminate. What that means is that whatever the customer is doing along the value chain, the bank supports the customer. Secondly, the bank also works with every player along the value chain, smallholder farmers, small, medium enterprises, large corporates. The bank plays in all the sectors, and that's what plays the bank as a bank to deal with when it comes to agribusiness in Nigeria and beyond. So I'm here to network, meet people, and to also learn. Thank you.
Fantastic, fantastic. So thank you all so much for your introductions. One of the things that I think we can all agree on is that across the value chain, there's different types of agribusinesses, and different types of agribusiness require different types of funding. And of course, from the investor or financier side, they of course have investment criteria of what it is they're looking for when they want to invest. So my first question will go to Emeka and Mr. Olumide. You both have different types of financing that you provide. One is a fund, and the other is quite an innovative capital markets type structure. We'll probably start off with Mr. Emeka. The question I'd like to ask you, when you do decide to invest in an agribusiness, what are some of the criteria? What are you looking for? And that's for you, Mr. Emeka.
Okay, thank you, Bamidele. I think that the way we decided to approach the sector is to, first of all, break it into two, right? So we have the typical large agri-businesses who by themselves can access the capital market. And for those sort of entities, we would be providing some levels of financial advisory and also this typical standard due diligence that you do to take a client into the capital markets. And for you to access the capital market like any other business, you need to have a decent governance structure, a decent corporate structure. You need to be a well-run entity making profits. You go through the scrutiny of 3 levels of scrutiny. So you go through the whole rating agencies who basically rate you and give an independent opinion on your creditworthiness. And that if you're looking to access debt, you go through the scrutiny of a regulator, in my case, Securities and Exchange Commission, who basically, they have certain levels of disclosure requirements that are required of you for you to disclose to institutional or high net worth investors that will be buying whatever instruments you're issuing into the markets. So that will work with both debt and equity. Then you also go through the whole scrutiny of an independent, so like a legal counsel who does some legal due diligence on you and gives an independent opinion, legal opinion on some of the material contracts you're involved in and sort of impact that it can have on your business long term. So all of those things come on the table when you're a large corporate institution and you're looking to go into the market, either to do debt or equity and to raise funding. So what we work at there, like we sit there as the architects who basically bring all of these things together. We advise you, we prepare you for the sort of meetings. So we prepare you for the engagement with rating agencies, we prepare for the engagement with the commission, we prepare for engagement with legal, we appoint the lawyers and we work with you. So we so I can get you ready to go on into the market and do what you want to do, either as debt or equity. And from the equity perspective, you want to kind of go into the private placement or an IPO, whatever you want to do. But what we've seen at DLM is that the agri sector in Nigeria is fragmented, and we can't really pick up a lot of decent, well-run entities further down, particularly down at the downstream and the midstream. So what you have is that the best companies in the industry are all sort of like upstream. They basically are the ones who bring the product out to the customers. And and no one is really looking at the best way to finance, say the farmers. No one is looking at the best ways to finance the middlemen who aggregate and help them to store so that we can store agri produce in the best way possible. So what we've decided to now do is to, wait a minute, sit back and find a new sort of like a sectoral approach. And the sort of things we're looking for simple. We're looking for any business who is either into either you're at the input and farming, so like a subsector, or you're in the whole aggregation and offtake business. That means you're a merchant or you're trading like it, or you're sort of like you're providing a service. You provide mechanization, irrigation, and other stuff. We know that there's still the challenge of accessing finance across all of the value chains. So what we've decided to do is to now start creating products. So we create products that sort of like address an issue or address sort of like an interface in the entire value chain and find a way to now qualify entities that can access that product. And in doing this, we're not necessarily looking at the entities beyond the standard. We typically what we call eligibility criteria. So you need to be a decent, you need to have been running for say 2 years plus. You need to have shown some good track record of making profits. And some of the ways we've done this, we found a way to sort of like to ring-fence your risk away from the market, so that the funding we are getting from the market, by and large, is not sort of like connected to the direct risk of the end users. We've done that using a lot of structured finance, and so one of the things that we've been able to develop in doing this is we've been able to design 3 products. With the first one, like I said, with the first one launched. The first one that's launched is more around offtake financing. So we just secured a 50 billion asset-backed commercial approval, where we can connect any entity who's looking to buy agri-produce from farmers at the point of harvest and put them into decent storage systems. So we're going to agree with the collateral managers who store for us. And so that you have certainty, product certainty all through your productive year, all through your year of production. So we've done that for off-take finance. We are now designed something for input financing, where it works very much like the Anchor Grower scheme, but with a lot more private sector discipline. And now we are now looking to do, we design for mechanization, we design for irrigation. So it's all of that, so like designing the products where you're now almost having a parallel lender, probably that loosely, to the commercial banks. The only difference is that this parallel lender sources funds from the capital market. And all of this is purely off balance sheet, structured finance solutions. And that's what we decided to start doing to, I guess, at the sectoral level. But with the individual corporate level, we'll do what any typical investment bank would do, get you ready for whatever sort of transactions you're looking to go into, and take you through the entire process. And that I just spoke to, so I'll leave it at that. Thank you.
Okay. So something that you didn't mention that would be nice to know. You've mentioned, yes, you're looking at working with companies that are already profitable, companies with a good governance structure. But what you haven't mentioned is the size of companies. That might be good for any agribusiness that's here. What type of size are you looking for?
Okay, good point. I think the way to look at it is what kind of size, particularly if you're looking to raise capital from the capital market, what sort of deal ticket size can you issue into the market, debt or equity that will create significant interest from investors. On the debt side, if you ever been into sales meeting with pension funds or other institutional investors, some of the things they typically say to you is that it takes them the same volume of work to make an investment decision regardless of the size of the investment. So the rather you're coming in with a decent sized deal. So I always say if you're looking for a medium-term debt from the capital market, you should be looking at doing anything above 5 billion. So then the question is, how many businesses can do 5 billion in today's Nigeria? And then 5 to 10 to 15 and 20 billion. That's when you're looking at you. And if you're not able to do that, then you're most likely going to be funding from the private side of the market. And likewise, same thing with equity as well. And so, and if you take that as a view, then you now start asking what size of company, what should be the size of your balance sheet? You're looking to do a 10 billion, 20 billion capital raise from the market.
Okay, fantastic. So hopefully, as a result of this call, you'll get those types of size following you, hopefully. So Olumide, I'd like to direct my next question to you. FAFIN, that particular fund has been in existence for a while. It'll be good to hear from you the types of agribusiness that you look for, number one. And number two, it would also be good to hear about some of your success stories as a result of that fund. Mr. Olumide.
Thank you very much, Bamidele. Very interesting questions. Yeah, so so FAFIN, just for the benefit of the listeners, so FAFIN stands for Fund for Agricultural Finance in Nigeria. You know, and I think just to give a background, so the types of investments we look out for in FAFIN is very clear. So first, it must be a Nigeria-based investment. You know, so we can only invest in Nigeria. That is one. Is a region, very region exclusive fund. Secondly, it touches on it must touch on agriculture. So a bit different from this profile that Opeyemi gave. For us, as long as you can talk, we can attribute it to agriculture. You know, whether it's going to be the input, production, processing, as long as we can attribute that to agriculture or food, let me put it that way, I think it falls into our bucket. Now, for FAFIN, we have two key criteria that we use to identify investment. The first one is impact. You know, and this would sound pretty easy in agriculture because you would expect that as long as you're in agriculture, you've probably touched the lives of people. But I think we also go the just one extra lens of, we have to clearly see how an investment in that company would directly impact smallholders, either as their suppliers or as their customers. So we must be able to show that that investment will have a substantial impact on the lives of people of Nigeria, so to speak. The other one is return. So we also, because I think I mentioned earlier, I think the objective of the fund is to show that in agriculture you can make money and you can touch the lives of people. So we spend a lot of time to look at return, and this is far-fetched. And I must point out here that there are a few funds that are more leaning more towards return. There are some that lean towards impact. So you as a company, you must also know the kind of private equity or fund you're actually approaching. And I think that leads to one key area that we look at for investment, right? We are typically equity type investment, which means that we don't take collateral, so to speak. Our collateral is believing in what you're doing. So the question is, how can you convince us of what you're doing? And then the easy way I ask promoters is, tell me exactly what you saw that made you put your money into this business. So if you can show me what you made, explain to me in clear terms why you thought this would be a good investment, probably I should be able to see what your investment is. The second, because it's equity again, so we pay a lot of attention on the funders. We want to know who we're getting to bed with. So we spend a lot of time to look at the character of the person. As the person being chased around by EFCC, has he been owing all the banks in the world and all that? We don't want all those kind of people. So we spend a lot of time to understand the character. The second area, second big area is the competence. Because we are not going to be going to the farms, so we spend a lot of time understanding that the promoter and his team on ground can actually execute on their business plan. So our objective is for us to ensure that indeed there's a team on ground that can actually execute. So we spend a lot of time on that. And I hope my audio is still clear. Good. The last area I will mention before I speak a bit about the fund we've done is that you have to let me know what's in it for me. Yes, how can I, now you've made money, how can I make money? So so that, I think that's the biggest part, because if I can't see how I can make money, I can't see it. Then so you mentioned about some of the investments we've done. So I'll mention a few, and then I'll just also speak about one or two very quick case studies that I think might be useful.
It would be good if you could also give us an insight on the size of investments that you target as well.
Okay, so yes, so we typically target investments of I'll tell you our sweet spots, because we have and I can see some questions people asking some time ago, something about the fund. I want to address the question now, and I'll speak probably at the end. Yes, so for us, we decide our sweet spot. Let me answer your question directly. So our sweet spot is an investment valued, I would say, about $3 million. And then I will also estimate that to perhaps companies with revenues close to between 1 and 1.5 billion naira. That's just a very rough estimate, So yeah, so I think that's what I would call our sweet spots, but what we also try to do is that in addition to, as part of our own impact objective, as part of it, we look for the companies that also indirectly fund the smallholders as well. So not only are we investing in you, but it's investing in you with the expectation that you should be able to make the lives of the much smaller people that we can't invest in under the private equity bucket to make their lives a little bit easier. So if I see a company that can give it $3 million, that part of that money would help smallholder farmers or outgrower schemes, I'll probably do that. Okay, that's another area I didn't mention. Linked to the Parfin Fund is a technical assistance facility, or what I'll call it, fund. So it's not repayable, and it's typically used to support companies that they can use those funds to actually make improve their efficiency either by outgrower schemes and so many times some of those funds help smallholder farmers. Okay, so to your question, so currently in the fund, the funding is actually coming to its investment end. So it's a 10-year fund. We're just about the end of our investment period now, and by the time we're done, we should have about 8 to 9 companies, ranging from poultry to dairy, cassava, rice, oil palm, shea butter. So quite a broad range. Like I said, we can invest anything and function. I would mention 2 companies. One of the first sectors that we looked at, which is dairy. So we invested in the dairy farming kind of. And what this dairy farm does, and I'll just go directly to the impact. I think that's quite interesting. In terms of returns, great, because we're about exiting, and exits. 1 second. Yes, we're about exiting. As for us, exits will probably be in a couple multiples from our investments. So what's good. But I think what is quite remarkable about this investment is that this company, in order to increase its milk intake, it actually created collection centers, for smallholder farmers. So many of the Fulani cattle headers that are around, them, they actually got them to settle down, and they sort of hoarding or hawking rather their milk. They actually settled around them to be able to get the milk, and so they created that whole community of Fulani herders that were no longer nomadic, were now settled, in Kano. That was a big one. And in addition to that, to encourage the girl children, they did a scheme such that if you can show evidence that you have a girl child going to school, they give you, I think, like 5% extra on the unit of your milk. So you register your own family name, the name of that your daughter that you're sending to school. So that was very, very positive in terms of impact. And of course, even creating all the milk collection and could preserve the milk from that area. That is one company. The other one I would mention is dairy. So the dairy company we invested was in 2016. So at the time we invested, so soon after we invested, there was a major challenge in the dairy space, and many dairy companies actually went under, and ours was substantially impacted as well. But over the years, apart from having returns that are significantly better than where we invested, the company is more or less back fully on its feet, providing not only the eggs that they were doing initially, but now even a lot of broiler meats in the Nigerian Middle Belt area. And then in addition to that, so their hatchery is so large and so well developed that right now they're literally just they have queues of people trying to even get day-old chicks from them. And it's amazing for us, because it was a company that was literally going on that by the time we invested, and was really risen up to be a major contender in the poultry space. Thank you.
All right, thank you. So to summarize, you're looking for a combination of impact. You obviously want to make sure that the returns are favorable, and typically you're looking for deals that are 3 million and above. Fantastic. So my next question is for Mr. Opeyemi from Access Bank. You mentioned in your introduction that you often do advisory for agribusinesses that come in for financing. Access Bank being one of the largest banks in Nigeria, I'm sure you get so many agribusinesses that come in. So what I'd like to hear from you, and if you could share this with our audience, is what type of advice do you typically always have to give to agribusinesses? So what are the typical types of advice that you have to give that would help them to secure financing from the bank?
Okay, thank you, Bamidele. Very good question. And first, like I mentioned before, the bank place so much emphasis on this advice service. Sometimes some customers are denied funding if you see so much gaps that requires these advisory services. And what we do is that we tell the customer that we do what we call the inspection. That means we go to your farm, we inspect the farm. So from the inspection, we see those lapses or those gaps. We also review your document or your record. So when we observe that those gaps, we call you in and give you that feedback that we need to work with you for maybe 2 weeks, a month, thereabout, to address some of these gaps. And the gaps we have seen a lot of time relate to management. We have seen farms where a customer wants to do aquaculture, the same customer wants to do poultry, the same customer is also looking at doing rice milling or rice planting. So you see them putting hand in so many things and they cannot build expertise on any of those ventures. And as a bank, if you're not careful, if you lend to those customers, the customer can call you, lend to my poultry. If you lend to such a customer, you will see that there will be diversion. Your funding for poultry will definitely go into rice, it will go into aquaculture. So we like to tell the customer that let's look at one at a time, specialize, build competence in a particular, let's know you for something, you know, that's number one. Secondly, particularly in poultry and generally poultry and maybe for veterinary stores, we see quite a number of biosecurity challenges. You know, some customers don't even know about biosecurity. The way they site their farm, the way the movement within the farm is not controlled. Basic biosecurity stuffs are not in place. Such a customer, if you lend, the money will not come back because there will be a disease outbreak in that farm. And if the farm is not even insured, you will see that your money is gone. So we also see challenges in succession plan. We've seen customers having no plan on what happens in the next 5 years, what happens to the farm in the next 10 years. It's just like one man. If the man is sick today, the whole farm is down. So we also encourage customers to have succession plan around their business. We encourage them to also go for maybe some short courses to up their skills and up their games around the business they do. We can organize a small training for their staff, and we also can connect them to maybe some organizations that can do training for their staff. And when we see that, maybe a key staff is lacking, we could also assist the customer to either recruit or recommend staff to such customers. So those are part of the advisory services that we do. It's only when we see that we have cleared all these key areas that we now look at lending. And from experience, we see that once we have been able to provide the advisory service to the customer, the normal farming practice is in place, the normal agronomic practices are in place, the proper biosecurity practices are in place. You will see that the customer is cooperative and the money is invested into the loan purpose, and you work with the customers, monitor as the progress of the farm or the enterprise. You will see that the customer is able to pay as I went due. In the course of that too, as you are working with the customer, you also monitor what we call character. I reckon that Mr. Olumide mentioned character, very, very key. So in working with the customer, we watch out for those things. I also talk about them as we progress. So we look out for the customer's character. Once we are able to satisfy all those in the course of providing the advice service, then we can lend to the customer. Thank you.
Okay. Fantastic, thank you. So you touched on some key things around management security, making sure that there's insurance, making sure there's some type of succession plan. Just for the audience, a question that I'd like to ask, these additional, you mentioned the advisory is for free, but the training that you provide, is that also free for the customers?
Yes, thank you. The training could be in two parts. There's one that the bank organize. That's our colleagues. Okay, maybe I should also mention that agribusiness has staff in the 6 geopolitical zones of the country. This brings us close to the customer. So we have our regional offices in all the geopolitical zone. So our staff could provide that training for their staff and for the staff of the farm, the prospective farm customer now. We could go to their office and provide the service. Secondly, if we feel, the required training is more than what we can handle, we have some organizations that we partner with. Maybe I should mention USAID. USAID provide that support. So we could take the customer to USAID, or rather bring USAID to the customer, that we want to lend to this customer, but we have recognized these lapses. So USAID will come, provide the training for the customer, and it's free. So after the training and they are certified that, they've trained them, the bank will feel more comfortable in lending to such enterprise. So basically, our advisory services are very free. It's without any charge. Yeah.
Fantastic. And it's quite evident that the advisory services that you provide will surely enable agribusinesses to grow and, access to finance and access finance in a sustainable way. So I want to, before we move on to questions, I'd like to direct my last question to Mr. Ebenezer from Piron Global. Now, I know that your organization is a development agency, so to speak. You provide consultancy services. You work with a number of different stakeholders, including the donors, and you've also been able to develop incentives. It'll be good if you could maybe elaborate on some of the incentives or innovations that you've been able to work on to further support the agricultural sector.
Okay, thank you very much, Bamidele. So thank you. Basically, like I did mention, we are into facilitate to be able to give advisory to our partners as to what we see or we saw with the agri sector in terms of funding and lending. And so we kind of did a bit of research, started with a desktop and then also moving to the field where we disseminate questionnaires. And our focus was to get insights from the banks or the lending institutions as to the challenges and why probably what the appetites are concerning lending to the sector, and then also some medium-sized farming group or farming companies, to find out about them when it comes to access to funding. Our focus actually, eventually, we're looking at mechanization, looking at agro-photovoltaics with specialty in solar, and then also for irrigation. So these actually are focuses. And then we found out basically that most of the time, banks or lending institutions in the sector do not have appetite, to be able to, as it were, give funding to the agri sector per our research and findings. And we also saw that even in places or at points where they do that, they are only concentrating on those in the urban centers and those with commercial large, farms. They are not so much, as it were, associated with those smallholder farmers. These were some of the findings we came up with. And then we realized that there's a big gap, when you look at lending or funding to sectors like mining, to construction and others. We understood some of the things that the banks came up with and some of the things you talked about with the fact that there's a systemic risk when it comes to agriculture. But again, our findings show that if banks or lending institutions concentrate on tailor-made products for the farmers or the farm institutions, this will go a long way to help them, because with that, when it comes to even the interest rate that are put on, when it comes to the terms and conditions, these are all tailor-made, so that they don't give out facilities or loans to these people or these organizations generically as they do to other sectors. When you do that, it doesn't help, because again, the banking or the farming sector, agriculture sector is seasonal. You know, what they do comes in seasons. And so if you are able to tailor your funding towards that, that helps a lot. So again, in a nutshell, we realize that there's a limited specialized products that they do in terms of funding. There were higher interest rates, you know, from some of the respondents that we received from these farming institutions. There's a big information gap as well. Again, we found out that even within the banks, relationship officers who were in charge of loans or working or doing analysis on loans had limited knowledge about the agri sector. And therefore, in terms of funding, they actually did not know exactly what they were about. And therefore, we thought that government can step in, the central bank can step in, and the Bankers Association within the country can also step in. When these happen, we believe that access to funding will be a very good one when it comes to the agriculture sector within the Nigerian economy. Right.
Fantastic. And I guess in time, it'll be fantastic to see more of the work that Payron Global will be doing. And hopefully, particularly that token, hopefully that can be implemented in Nigeria in a sustainable way, hopefully. Okay. So I know that Mr. Emeka has to leave shortly. I just have just one last question, and perhaps he can then give some closing remarks. So I know that agriculture is an additional sector that DLM is looking to go into. Successfully signed an MOU with NISAL. As at now, it'll be good to have just a few touching remarks on how you see this playing out. If you can, perhaps some of the deals you have in your pipeline, and I guess some of the things you're looking for immediately.
Thank you, Bamidele. And yes, so I spoke earlier to the way we sort of like approach the agri sector, where we found a way to ring-fence a lot of the underlying risk surrounding the beneficiaries of the funding that we were mobilizing from the markets. And so we found a way to ring-fence all of that risk away from the markets, so that investors can part with their money, knowing that the risk that they face is backstopped by other structures and not directly linked to the end users of the funding. And in the first product what we delivered, we were able to take that through the scrutiny of independent parties, rating agencies and regulators. We secured approval to initially kick it off with 50 billion. And for that, we've signed up, as I speak, about 7 processors who typically would be using either maize, soya, or paddy rice as an input into that business. We've been able to incorporate the services of FX Exchange as our collateral manager, who's come up with storage systems. And we've gone into some backstop offtake arrangement just in case we need to sell up to a third party with other parties. So with all of this, out of these 6 processors, we've gotten interest of up to 21.8 billion that they'll be looking to get in financing in this quarter. And how that would work is simple. We would basically go into the CP market, which we'll start doing from this October, raise a series of CPs, pass it through what we call a program manager, who will now on-lend to these entities under a controlled structure by lending to a disbursement account, and then ensure that it is utilized for what they need to utilize it for. We've created structures around the collection of our money and all of that. And in the event where an end user, for some reason, is not able to repay, again, like I said, everything is ring-fenced away from that balance sheet. So we're still able to get a backup end user to come in and take the product and pay. And also, we also have a put option or we can sell this product to somebody else. So this whole thing, it went through almost like 9 months of work. We got a AAA rating on this asset-backed commercial paper program, and that just speaks to the credit quality. And in all of this, we've been able to do it without going deep into the underlying obligors operations beyond basic things like how long have you been doing this for? Is this the only business you do? How well do you know it? This and that. But because what we've said is that it's going to be a challenge taking them individually to accessing commercial paper to fund their inventory.
Yeah.
So we created an aggregation model to fund their inventory for them. And we expect to scale this up over time. And it's a similar model that we've done for input financing as well, and we're doing for mechanization. And yeah, about 21 billion will be coming. Touch wood, about 21 billion will be moving in from the CP market to finance agri uptake in the coming weeks, and going into the last quarter of this year. And as we sort of like see this develop, we would now start looking to scale up a bit more. And there's one last thing I need to touch on before I move quickly. We've also, under our principal investment desk, we've set up like an incubator business, where you have the sort of businesses that you know will be suitable candidates for the capital market in the future, but are not ready today. So we put a lot of our own money in there. It's that we are comfortable with taking that risk, and then we'll do a lot of what Okpeyemi spoke to. We'll do a lot of what Olumide spoke to as well, because now it's our money. We put in, but we incubate you, we keep you for, and we come up with a clear plan with you as to a roadmap as to when you can go to the big pot to start accessing proper money. At that point, we'll exit the investment. We've done it with equity. We've done it with a lot more with mezzanine. And so something that has like that's flexible, but with clear exit plan for us. So that's something we just started working on as well. And for that, we've onboarded an agri-tech business, and they're going to be the first beneficiaries of our investment. And we're looking to do, I think it's 2.5 million USD equivalent in Naira investment in that nature.
Okay, so that sounds fantastic, and I think it's quite innovative. Not just that, capital markets is something that, yes, it's being used, but I guess we need more of it. So we're looking forward to kind of seeing these disbursements, hearing more success stories. I know you have to leave now, so thank you so much for participating in the call. Okay, and we'll be in touch. Okay.
So just to move things along, I have a quick question for our other panelists, perhaps. There aren't a lot of audience questions coming in at the moment. So a general question to our panelists would be, could you offer some practical examples as to some of the projects that you supported and why they were successful versus other projects that you had to decline financing or that you financed in and that didn't succeed? I think from a practical perspective, it would be really interesting to see and to know why certain projects or partners are more successful than others. So just based on your experience and your portfolio, what has worked in the past and what hasn't? So perhaps we can start with Okpeyemi, and I'm really curious to also hear from Peer Development what has been successful and what not.
Yeah, thank you, Olayinka. Okay, I may not be able to talk about names of customers here on this platform, obviously for obvious reasons, for the confidentiality of our customers. But talking about what has worked and what has not worked. Number one is we look at for customers who are able to meet the basic risk acceptance criteria of the bank. And when we talk about risk acceptance criteria, it's not a big thing. It's just talking about the requirements. Basically, let me probably highlight some of the requirements that we look at for. When we see a customer's project, if, like I said, we'll visit, and if we realize that there's a gap that in the advisory service, we provide that. If you see the customer cooperating, and we see that the customer is putting in those suggestions or advice that we provide, then we'll be willing to deal with the customer, and it works. Secondly, we'll now be looking at the customer's business plan. What is a business plan? It's just a document that contains what the customer has in mind, the pictures the customer has in mind. The customers should be able to document what he has in mind for his project, for his business, for his farm. If you are doing backward integration, you need to explain, okay, I've seen this business, I've seen this opportunity, I want to go to backward integration. If you are looking at expansion, you should be document it. You should be able to demonstrate it in writing. If you are also looking at maybe forward integration, you should be able to tell us this is why you want to do forward integration. So we need a very detailed business plan. The customer should also be able to give us a cash flow projection. If customer is able to give us the cash flow projection, because we are lending for cash flow in the future, you don't have the funding down, the bank is giving you the fund, you should be able to tell us that, okay, month 1, month 2, I'll be able to generate this in the first year or thereabout. You should be able to document that in cash flow projection. We also need to see your performance, your turnover. What have you done before, either with Access Bank or with other bank? You need to give us your statement of accounts. If you are not able to give us that, then the bank will be thinking that, okay, why? What have you been doing? Are we doing, is it a startup, or are you just starting, or how has your money been applied? You know, so the bank is also looking at that. And where there is need for environment, because our Access Bank is very key in sustainability. If there's need for us to protect the environment, or what you are doing, we have effluent or waste that might have negative impact on the environment, we will be asking you for environmental impact assessment report. So if you don't have it or you don't know it, then we'll be able to guide you to how to provide that. So some of those things are very critical to the bank in funding your project. Then, like I said, as we are also working with you, we are very critical about the 5 C's of credit. We'll be looking at, we might not tell you, but we'll be looking out for it. And most important, like I did mention before, is your character. Your character is very important. Have you defaulted before? Are you having issue with any of the regulatory agencies? You know, we look out for those those things. History of returned check on your account, history of unpaid obligations from credit search. I mean, those are things that give us an idea of your character. Then we also look at your capital. Are you able to provide even 5% equity? If you say you are looking for 10,000, can you bring 1,000 from your own pocket? You know, some evidence of some commitment. You need to see that you're committed to this cause. So we'll be looking at for some of these things. Then, well, maybe the last, we'll also be looking at collateral. And this is not specific to one bank. It's not specific to Access Bank. It's regulatory. What comfort are you able to give the bank? The bank is not doing collateral lending. You are not planning to sell your collateral, but it's just a way out in case of the unforeseen happens. So those, if you are able to meet all these things, then the bank will be willing to lend for you to lend to you. The ones that have not worked is just direct opposite. If a customer is not cooperating, we are saying, let's bring in a farm manager. You said, no, I don't need a farm manager. Okay, get an accountant. No, I'm my own accountant. Let's put these biosecurity in place to ensure that there's no disease outbreak on your farm. Mm-hmm. You said, no, you're still insisting on what you know. You're not willing to, you're not being flexible, right? Let me use that word. You're not being flexible to take advice. You don't want to get someone to support you. You just want to do it the way you want to do it. And we see this resistance. And when a customer is showing that resistance without getting, when he has not gotten money, mm-hmm. You cannot imagine such a customer after he has gotten money. So when we look out for those things, and like I said, they are just the direct opposite of the other ones. If you see those things, the bank will not be willing to lend. Secondly, we look at the environment. If you look at your environment and we see things that could bring us some unforeseen risk, you know, let me give you an example. if you are doing a project in an area where there is bunkering, there is oil bunkering, you know, then it gives the bank concern. If they are telling you that, oh, your waste, let me give you an example. You are doing a cassava project. The waste will definitely impact on the environment. How do you manage this waste? How do you ensure that the environment is not negatively impacted? You know, and the customer is not willing, is not cooperating, then the bank will not be willing to lend. Then again, I should also mention that if you are putting your hands in too many things at the same time, and we cannot see key evidence of expertise or experience in a particular one, then we will also be reluctant to lend, because there will definitely be diversion. So if you are able to see all these things, you are cooperating with the bank is asking you to bring this, and you are able to, even if you don't have it, but you are willing to say, oh, bank, please help me. Who can do my business plan for me? Who can do my audited report, and you know, things like that. Then the bank will say, oh, this customer is willing and will be willing to deal with you. Thank you very much.
Thank you so much. That makes a lot of sense. I would like to redirect the same question to Parent Development and Parent Global Development, to Ebenezer and Romain. I know that you've done a lot of fantastic work in Nigeria, especially in your collaboration with GIZ. So I'd be curious to hear some very practical examples as well about projects that have worked that you've gladly financed, and other projects where you've seen that financing might not be the right decision for you at the moment. So perhaps if either Ebenezer or Romain could address that question. Thank you.
Hi, Yanka. Perhaps I can start, you know, just a kind of practical example also in terms of, you know, where you have agribusinesses now or farmers really collaborating with technology service providers in terms of, you know, really forming partnerships and saying, you know what, there's a need from an agribusiness for a particular service or product, whether it be scales, you know, weighing scales, whether it be kind of chilling tanks, or even with regard to business plan or proposals, that, you know, that there's a joint coalition work also happening between those entities also. So yeah, I think that's one example. I'm giving over to Ebenezer also. Ebenezer?
Yeah, thank you very much. Sorry, my video was giving me a bit of, yeah. So just a little on what Romain had said. So far, yes, that collaboration, that joint collaboration between service providers and farmers, that is something that we have seen, and I think that it looks quite impressive going forward. And then we have also seen that with this, there's going to be increased productivity. This is something that the farmers, everyone has been looking for. And if there's access to finance and they are able to secure this, then we believe that production would even quadruple or triple, as it were. Again, farmers are leveraging on technology. And technology, we're talking about both the mobile and other forms, where, you know, in terms of, for example, if they kind of have accounts with banks, they are able to leverage on mobile to be able to make payments when they take loan facilities and they are supposed to pay at the end of the month or at the end of a particular period. They can leverage on technology. This is something that we have seen also, and we believe that it holds a lot of goodies when it goes into the future. Again, the regulatory environment by the government, it's very open, and it's just a matter of commitment that must be made. And when this is done, I believe that in a nation where not less than 40% is contributed to GDP from the agri sector, I am very positive that when commitment is made, once the regulation environment is great, there would be greater things that we can see. Right. Thank you.
Thank you so much. A question to Olumide from Sahel. What do you think the market is missing at the moment? Where do you think that there are great opportunities to step into that haven't really been leveraged on by people? You get a lot of inquiries on a regular basis, and you are heavily invested, not just in Nigeria, but beyond. So where do you think are gaps or opportunities that haven't been leveraged on?
Just to confirm, when you say where, you mean sectors, on tap sectors?
Yeah.
So, okay, very good. Thank you very much for the question. So, I wouldn't say they're untapped, but I would say there are still lots of sectors with opportunity. And because of many reasons, either there's a lot of inefficiency in those areas, or there's just, based on the population of the country, there's always a lot of demand. So there are a few sectors that we've done investment. I would be happy to do a second. Poultry is one, oil palm is one, but rather than just picking sectors, what I would say the biggest gap, I would say, which if it can be addressed would help, is we need to get to the point where a lot of us are seeing agriculture not just as something I've been doing, or okay, I have a plot of land, I want to start poultry or fishery or whatever, but to actually go through the kind of rigor that most people in other businesses go through to set up their businesses. In agriculture, I think the biggest area I've seen is where people just go into the business without necessarily thinking through what is required, but just because they got their pension or they got some money, and well, let me go and start. Nigeria is a large country, let me go and start poultry. Or okay, my neighbor planted banana, so I should go and also start a banana plantation. So it's that when you probe a lot of business owners, promoters, and to my first question of why did you put your own money, you realize that many people didn't really have a very good answer for that. So I think in agriculture, there is a lot of opportunity in many sectors, because the opportunities come not only from substituting income, even the changing middle class, the growing middle class is there, even just looking at value chains, that even just link different chains is also the same. So there are very many areas in agriculture you can play and make money. You get that, there are opportunities there. But you need to think, we all need to think through, how do I harness these opportunities? How do I make money from it? And not just do it because, hey, there's what do you call it? Fruits are spoiling. 40% of fruits are spoiling. Because of that, I'm going to go and start a fruit making company. It doesn't work that. It's not as easy as that. So one needs to take that time to think through, what does it take to do a successful business, and then to take that rigor to do the required. I think people are talking about business plan and not just getting somebody to help you do the business plan, but spending that time to think through and understand, know for yourself that this is why I believe that this one can make money, one can have impact in this space. Thank you.
Thank you so much. Bamidele, so I'm going to hand over to you for any final questions you may still have for our panelists.
Okay, I think there's still some questions. Should we, I know we've also gone past the time limit. Should we conclude, or should we ask the last set of questions?
Because we have serious time restraints, I would advise that we conclude the session. And if there are any urgent matters, they can always direct them to me, and I'll forward them to our panelists, and they can then correspond bilaterally.
Okay. So once again, thank you all for participating in this much needed webinar. Access to finance is something that always comes up, and it's something that we always need to keep attention on. One of the great things about this particular session was the diverse perspectives. And I'm sure for any agribusiness here, they would have learned a thing or two. If any of the audience have questions that they'd like to direct, please do send it to AHK, and I'm sure they'll pass it on to the right speaker. To all the panelists, Mr. Ope, Mr. Olumide, and Ebenezer, and Emeka, who's not here, thank you so much for participating, and hopefully we can stay in touch and drive the sector forward. To the organizers, thank you so much for putting this together. It's definitely needed, and we look forward to having more of these webinars.
Okay, thank you. So in terms of final questions to the audience, I thought that we still had, for our panelists, I thought that we still had a few questions, but if we don't, then perhaps we can address the final question by Joel Adegoke. Sorry, talking about bending rules. How flexible are any of your organizations when it comes to your criteria versus being a bit flexible to bend rules a bit? Are your rules set in stone? I think Opeyemi did address that earlier by saying that if there's a willingness to listen to feedback, that the banks would still be willing to work with you. But in terms of general requirements, how much flexibility do your organizations have?
Okay, thank you, Olayinka. And I saw the question, and I think I tried to clarify. Flexibility, yes. The bank is willing to talk to customers. And the challenge is when customers hear about these requirements, they always look at them as very big, and they are not. Please approach the bank. If you are not, let me give you an example. For example, now we talk about security collateral. It's not compulsory that it must be legal mortgage. Nobody is saying you must have a house in Ikoyi, have a house in Abuja. No, tell the bank, oh, my bank, I don't have a house somewhere. However, I have this. Then the bank will look at it. The worst that will happen is that if you're asking for 100 million, the bank will say, oh, based on what you have, we can only give you 50 million now. Let's start with 50 million. And I think it's fair. So don't sit back and feel the bank is too far from you. The bankers are always busy. They don't have time. No, approach your banker, sit with your banker, discuss your specific condition, discuss your specific position. This is what I can do. This is what I cannot do. The bank will now say, okay, fine. You're asking for 10 million. Can we start with 3? Can we start with 5? Then if you see your performance with the 3 or 5 million, we can gradually proceed and take it further. So feel free, send a mail to us. And if there's need, feel free to call me. If you can get my number, or you can just send a mail to that email address. We will come to you. We will call you for a meeting. We can come to your farm, and we will sit down and see how we can assist you.
Thank you. Thank you. So what about Piran Global and Sahel? How flexible are you with your criteria? Is it similar, whether there is some room of flexibility or not? And then just finally, final remarks by all panelists, please. Thank you.
For Piran, we are kind of middlemen. We actually, as it were, do not side with and say that we are for the banks or we are for the government or we are for the customers. We are middle people, and we want to facilitate and make sure that the farmers or those who are accessing finance are happy and they get what they want. The banks or the lending institutions are happy because they are able to give them without fear of any form of systemic risk. So for us, we are so flexible because we expect that both sides will be happy. We ensure that there's a demand side will get what they want and supply side will be able to give out what is expected or what is demanded, right?
Thank you.
Okay, so I think for us it's a little bit different. So there are a few items that we cannot change. Like I said, we must invest in agriculture. So on that one, we cannot be flexible. I can't bring what you call it, an investment in entertainment, So then it has to be Nigeria. So I think those ones are clear. The other, in terms of our investment, the type of companies we invest in, the truth is that if we don't truly believe that that company will make money, or that idea makes money or has a good impact, probably won't invest. I'm not sure, if there's any, I'm not sure even the case of flexibility. It's more, do we, there's nobody that would encourage you invest in a company that you truly don't believe in. The area where I guess flexibility may come is in the investment side. I mentioned that our sweet, which is why I mentioned the sweet spot is 3 billion. Not that we can't do lower, but we can. Yeah, so we are flexible on that to look at if it's smaller than what we want, you know, we can look at it, you know, if we see the opportunities, we can definitely invest. But in terms of the core investment criteria, which is the region, the sector, you know, we are quite, there's really no room to change that.
Fantastic. Thank you so much. So great. There have been a couple of other questions that have come in, but again, please do send me an email and I'll pass them on. Some of you already chatting bilaterally, which is great. But if there are any other questions, please make sure that you direct them to us at the delegation, and then we'll forward them to the panelists and the moderators. As Bamidele said earlier, we are really grateful for having all of you join us. It's been a monthly webinar series since the beginning of the year, organized by the Delegation of German Industry and Commerce, and we will be continuing this series. Sometimes we have 30 people present, sometimes we have 120 people present, but for us it isn't important how many people join our webinars. The important thing is that we share valuable information, and so we are really grateful to every single panelist today for joining us and sharing their input and how they approach financing in the agricultural space. We all agree that agriculture is a really important sector. We're happy to see so much interest, both locally and internationally, into the sector, and we'll be happy to drive those conversations forward. Today, we looked at access to financing. Next month, we will be looking at exporting to EU markets, and it's going to be a really interesting session again. And again, we will have Access Bank and other really interesting speakers present. So please do join us for our next webinar and keep yourselves informed about upcoming activities and events, both within our department, agribusiness, but also across the spectrum of other departments that we have. As we're celebrating 40 years in Nigeria, we've got a host of events coming up. So please do join us on our social media channels, follow us to keep yourselves updated and informed. So yeah, we're going to conclude today's session. Sorry that it's been a bit longer than it should have been, but I think it's important to just allow room and give space to our panelists to share about their experience and how to approach them for financing options. So thank you so much for joining us today, and we look forward to seeing you next time. Goodbye. Thank you. Bye.
Thank you. Bye-bye.